Welcome to another Capital Taxes Incorporated production. Can I pay my kids to avoid taxes? Explained FAQs. Welcome to this online video tutorial on paying your child to reduce taxes legally. In this guide, we will answer two important questions. Can I pay my kids to avoid taxes? And what age can I put my child on payroll? We'll also address whether owning a business is a requirement for qualifying for the $12,000 payment of salary to your child. Question 1. Can I pay my kids to avoid taxes? The answer is yes, you can pay your kids legally to reduce your taxes. However, it's important to understand the rules and guidelines set by the Internal Revenue Code, IRC. Question 2. What age can I put my child on payroll? The IRC does not specify a minimum age to put your child on payroll. However, the child must be able to perform genuine services and the payment should be reasonable for the services rendered. Generally, a child should be old enough to understand the work and responsibilities involved. Do I have to own a business to qualify for the $12,000 payment of salary to my child? No, you don't necessarily have to own a business to qualify. The payment of salary to your child can be made through various legal methods, such as hiring your child as a household employee or utilizing their services for specific tasks. Real-life scenario example. Let's consider a scenario where you own a small gardening business. Your 15-year-old child has been helping you with basic gardening tasks like weeding, watering plants, and maintaining the garden. You decide to put your child on payroll and pay them for their services. The payment should be reasonable for the work performed, based on factors like the market rate for similar services and the time spent. In this case, you determined that a monthly payment of $500 is reasonable for your child's contribution to the business. Step-by-step approach. 1. Determine the services your child will provide. Identify the tasks your child is capable of performing and how they can contribute to your business or household. 2. Establish a reasonable payment. Research the market rates for similar services and consider factors such as time spent, complexity of tasks, and age of your child to determine a fair payment. 3. Keep accurate records. Maintain detailed records of the services your child provides, the hours worked, and the payments made. This will help support the legitimacy of the arrangement. 4. Issue a Form W-2 or Form 1099. Depending on the employment classification, you may need to issue a Form W-2 for household employees or Form 1099 for independent contractors to your child at the end of the tax year. 5. File taxes properly. Include the wages paid to your child on your tax return, following the guidelines provided by the IRS. Seek the help of a qualified tax professional if needed. 6. Consult the IRS publications and guidelines. Familiarize yourself with the relevant IRS publications, such as Publication 15, Employer's Tax Guide, and Publication 926, Household Employer's Tax Guide, for detailed instructions and requirements. Conclusion. Paying your child to reduce taxes can be a legitimate strategy if done in accordance with the IRS guidelines. Remember to ensure that the payment is reasonable, the services are genuine, and proper records are maintained. Always consult the IRS publications and consider seeking professional advice to ensure compliance with the tax laws. That's all for today's topic. Note, this video tutorial is intended for informational purposes only and does not constitute professional tax or legal advice. Consult a qualified tax professional or attorney for specific guidance tailored to your situation. This video is brought to you by Capital Taxes Incorporated. Thank you for watching, and see you in the next video.